Today, let's talk about something very important. Something that might seem simple on the surface, but actually tells us a lot about the global economy. Costco is seeing a shift in member behavior. And this shift is not just about shopping habits, it is a signal. A signal about how consumers are thinking, spending, and adapting in today's uncertain economic environment. So what exactly is changing? Let's break it down. First, Costco has reported that shopping frequency is increasing. In simple terms, people are visiting Costco more often. Traffic is up about 3.1% globally, and even the average purchase size is up around 4.2%. Now, this might sound like good news. More visits, more spending, stronger business, and yes, it is good news for Costco. But here's the deeper story. Traditionally, Costco has been a bulk shopping destination. Most people would go once a month, fill up their carts with large quantities, and then not return for weeks. But now, that behavior is changing. People are going more frequently. Why? Because the economy is changing. We are living in a time where inflation has come down slightly, but the pressure on household budgets is still very real. Many consumers are becoming more cautious. They are not just spending less, they are spending smarter. And this is where Costco comes in. Costco has always been known for value. Its pricing strategy is built on very low margins, often around 14 to 15%, compared to traditional grocery stores that can go as high as 25 to 35%. So when consumers feel pressure, they shift toward value-based retailers. This is what economists call a flight to value. And Costco is one of the biggest beneficiaries of this trend. But here's where it gets interesting. Consumers are not just buying in bulk anymore. They are becoming more selective. Instead of one large monthly purchase, they are making smaller, more frequent trips. They are managing their cash flow more carefully. Think about it like this. Instead of spending a large amount up front, people prefer to spread out their spending. This tells us something very important. Consumers are cautious. They are not fully confident in the economy. Now let's go one level deeper. Another major shift is happening in how people shop. Younger consumers, especially those between 18 and 44, are increasingly preferring self-checkout and digital experiences. In fact, more than half of younger shoppers now prefer DIY checkout systems. This is pushing Costco to evolve. The company is now investing in automation, faster checkout systems, and even AI-driven personalization. For example, Costco is testing automated pay stations that can complete transactions in under 10 seconds. Why does this matter? Because consumer expectations are changing. People want speed, convenience, and efficiency. And if companies don't adapt, they lose customers. So Costco is balancing two things at the same time, maintaining its traditional in-store experience while also modernizing its operations for a digital-first generation. Now let's talk about another important trend. Private labels. Costco's Kirkland brand is becoming even more important. These products are often 15 to 20% cheaper than national brands, but with similar or even better quality. And in today's economy, that matters a lot. Consumers are trading down. They are choosing store brands over premium brands. This is not just happening at Costco. It is happening across the retail industry. But Costco is uniquely positioned because its private label is already trusted. This creates a powerful advantage. Now let's connect all these dots. More frequent visits, more value-focused spending, higher demand for private labels, greater preference for convenience and technology. What does all this tell us? It tells us that the consumer is evolving. But more importantly, it tells us that the consumer is under pressure. Even though the economy is not in a recession, people are behaving as if it could happen. They are preparing, they are adjusting, they are becoming more disciplined. And this is why Costco's performance is so important. Because Costco is like a real-time indicator of consumer health. When Costco does well, it often means consumers are still spending but carefully. And that is exactly what we are seeing today, a resilient but cautious consumer. Now let's talk about what this means for investors. From an investment perspective, Costco looks strong. Membership growth continues, with paid members increasing around 4.8% year over year. Renewal rates remain extremely high, above 90% in key markets. And digital sales are growing rapidly, up more than 20%. These are all positive signals. But there are also risks. One major concern is that growth is increasingly coming from existing members spending more, rather than new members joining. Another concern is generational. Younger customers are harder to retain. And if Costco cannot adapt to their expectations, it could face long-term challenges. So the big question is this: is this shift in behavior temporary, or is it permanent? If it is temporary, then Costco will continue to benefit in the short term, but things could normalize later. If it is permanent, then this represents a structural change in consumer behavior. And that could reshape the entire retail industry. Now let's zoom out and look at the global impact. This trend is not limited to the United States. Even in markets like China, consumers are moving toward warehouse-style shopping and value-driven purchasing. This suggests that what we are seeing is not just an economic cycle. It may be a long-term shift in how people think about spending, from impulse buying to intentional buying, from brand loyalty to value loyalty, from convenience alone to a balance of convenience and cost. And companies that understand this shift will win. Companies that ignore it will struggle. So here's the final takeaway. Costco's shift in member behavior is not just a retail story, it is an economic story. It tells us that consumers are still spending, but they are doing it more carefully. They are becoming smarter, more disciplined, and more value-focused. And in a world where uncertainty is still high, that behavior is likely to continue. For investors, this means looking beyond just revenue numbers. It means understanding consumer psychology. Because at the end of the day, the market is driven by people. And right now, people are telling us one thing very clearly. They are cautious. But they are still spending. And that balance is what defines the economy today. This is PyUncut, bringing you deep, simple, and clear insights into the world of business and markets. Stay informed, stay ahead, and I will see you in the next one.